please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Very good morning. Welcome to Chartbusters. Well, it's not a great start to a Monday morning. In the next half hour odd, we're going to tell you how to trade the Nifty. I'm Nigel D'Souza, and with me is Mangalam Malu. Hey, Mangalam, things are looking too good today. The 100 DMA, that's got knocked out of the park the minute we started off. In fact, that was at around 10,443 approximately. So that's rather important because technically we're rather weak now. The 200 DMA, that's what I'm looking at in terms of a downside, 10,120 approximately. And the low for 2018, that as well fairly important at around the 10,276. So I think the director should just pull up the next plate as well. And call writing, that's bound to happen when in fact, we are seeing selling pressure. But what's a little worrying is that the 10,300 put that was seeing writing in the last few days, that in fact has come in for some unwinding pressure. So 10,400 call, yes, that's being written, but the 10,300 put, some unwinding being seen over there. I'm a little worried on that front.
That's absolutely right. Nigel, we're seeing a 100-point cut on the Nifty, and that coincides with the kind of cuts that we're seeing in the Asian markets as well. In fact, if you take a look at the Nikkei as well as the Hang Seng, both of them at the low point of the day. The Korean markets too, which opened with a gain of about 0.3%, right now are sitting with a cut of about 1%. So we're seeing a sharp decline across the Asian indices. So that coincides with the kind of fall that we're seeing in our markets. Not too well on the advanced decline front as well. 3 stocks in the red for 1 in the green. That compares with about 2 in the red for 1 in the green is what we saw. So the difference between both the red and the green lines is only widening. First up, all the top stories that we're tracking at this point in time. US President Donald Trump's announcement to impose 25% tariff on steel imports and 10% on aluminum imports hurts metal stocks. Hindalco, Tata Steel and SAIL slip in trade today. HSBC note says the direct impact on India is likely to be minimal.
And Tata Motors slips 3% on the back of weak JLR sales and concerns about increase in US import duty on European cars.
CNBC TV18 accesses the Form 483 issued by the US FDA to Aurobindo Pharma. The drug regulator has issued 9 observations to Unit 4. Credit Suisse, however, upgrades the stock to outperform, says observations milder than expected. The stock down 4% though.
And Canfin Home gains an otherwise weak market after RBL officials with their representatives from KPMG and EY met the management of the company. The meeting was arranged by Canara Bank to understand the business model of the company.
Another group of stocks that are outperforming in an otherwise weak market are the IT stocks. Outperform because Moshe Khatri, the IT analyst, tells CNBC TV18 that 2018 seems to be a good year for the entire IT space. Spending trends looking better.
Well, we're down 100 points as we speak. How do you trade the Nifty from here? Ashwini Gujral's with us. Well, Ashwini, the bulls would have been hoping that Monday never came because, we're down close to around 100 points odd. Early this morning, you had given us a sell call. I think the target at that point of time was 10,320. Any revisions there?
See, first of all, don't try to be a bull in this market because, till now the market is playing around. The real fall is likely to start post the afternoon. So often people are getting excited, intraday lows, there's a recovery, etc., etc. ICICI Bank right now is breaking its 200-day moving average. If large stocks start to do that, I don't think 10,300 is going to hold on. It can break as early as today. So right now you could say that it's looking relatively flat. But I think the big selling, the way it comes in the last hour, 2 hours, that just shows that that's when professionals play. And I think FI selling continues because now they have a new sector to bash, which is the metals. And I think the metal rally is going to go through fairly strong correction. So having said that, for the moment, Hindalco is a sell with a stop of 235, target of 220. Balrampur Chini is a sell with a stop of 116, target of 105. Hexaware is a buy with a stop of 348, target of 364. One more thing, the mid-cap space, I track it through the Nifty Next 50, which is down 1.2%. The market breadth is fairly weak. In this sort of a scenario, the buyers will move to the side and you will have, stronger than expected selling even at support levels. Like today, 10,400 thereabouts was a resistance which we failed. So chances are that buyers will totally move to the sidelines now, and the counter rallies may not be as strong. So don't try to go long. In fact, on rallies, only look to go short.
All right, only look to go short on the rallies. That's the word coming in from Ashwini. Thanks a lot for that. Meanwhile, those are some visuals coming in from Prime Minister Narendra Modi from the Parliament. In fact, the budget session of the Parliament resumes today. So standing there for a photo of being welcomed by his compatriots. We'll keep getting some more visuals. And perhaps if the Prime Minister does address the media, we'll cut into that in a bit. But let's move on then. The big story is, of course, the proposed hike or expected hike in import tariffs. Import tariffs to the US. So let's get in some more details out there. We have a CNBC TV18 exclusive. Rattled by a hike in import tariffs by India, global automakers seek reversal of the import duty hike on completely knocked down or CKD vehicles. Ronojoy Banerjee now joins in with more details. Good morning, Ron.
Hi, guys. Well, essentially what has happened is that in the budget, as we all know, the import duties on CKD went up from 10% to 15%, and import duty on certain components, which was around 7.5%, that has now gone up to as much as 15%. So there's been a double, so it's more or less been doubled now. That has not gone down well. We understand now that at least two, global automakers, Triumph Motorcycles, which is a UK-based company, they are also having an alliance with Bajaj in India. They have now written to the government on this issue. Along with them, Ducati has also raised the matter with government officials, saying that this is seriously going to hurt their business interests in India and could also potentially hurt the government's flagship Make in India program. It's not just restricted to these two guys. We understand Audi, Mercedes-Benz, BMW. They do a lot of CKD work, remember, out of India, even though they've been gradually increasing the localization from the country. But CKD operations still, constitute a fair chunk of their business. They have now urged industry body SIAM to officially take up this issue with the government, saying CKD hike is going to peg them back more. They've also cited that this CKD hike needs to be seen in the context of the GST cess hike that was announced somewhere around the month of September, which they feel has come down and hurt them. It's been like a double whammy for them. We also understand Ford India, Volkswagen India, they are likely to raise this matter anytime this week. So you're seeing a lot of, concern being raised by global automakers. And one interesting thing that they are all telling me is that, remember, currently as far as India-Thailand FTA is concerned, India can import automobile products at 0% import duty. And if you look at all these companies, they all have manufacturing facilities or assembly units in Thailand, whether it's BMW, whether it's Audi, whether it's even, high-flying companies like Harley-Davidson, Triumph. They all have manufacturing plants in Thailand. Harley-Davidson will shortly be commissioning their plant. So in a sense, the message that these companies are getting is that, hey, don't make in India, but, just merely import these products from Thailand at 0% import duty, which they feel could be, one of the inadvertent consequences of this government move.
Okay, all right. Thanks so much, Ron, for joining in and giving us those details. Well, just keep an eye on the markets. We're down more than 110 points now. 10,350 was what Ashwini was talking about. Two stocks should come up for you. One is Infosys. Let's pull up the intraday chart over there. And you should also pull up another one. That's ICICI Bank. Both of them are moving lower. And that's the reason why, in fact, the Nifty has slipped a tad bit more. So keep an eye out on that one. Even India Bulls Housing Finance is taking a bit of a knock. But one stock that's done very, very well is Endurance Tech. Well, that's in focus after the group's biggest client, Bajaj Auto, posted strong February auto sales numbers. To discuss that in detail, we have Mr. Ramesh who joins us. Hi, sir. Thanks so much for joining in. Well, top of mind, sir, is this import barriers that we're talking about. If you could give us a sense of your understanding, because we understand that you produce aluminium die castings. What could happen if aluminium prices do come lower? Will that help you all? Is that a pass-through?
Well, aluminium prices if they come down, it's a straight pass-through. See, normally the indexing of metal part and other things that happens directly with the customer on a straight pass-through. Mm-hmm. So it doesn't really affect our either revenues or margins at any point of time.
All right. So no impact as far as your revenues and margins are concerned with regards to the aluminium prices. But Mr. Gahine, a third of your revenues do come from Europe, and we understand four-wheelers account for most of those revenue components as far as your European business is concerned. We also learned that there is a possibility of tariffs being imposed or import duty being imposed on European cars which are exported to the United States. Does that have an impact on your business?
Well, we can't say right now. Let the whole business pan out, and because these tariffs and productionization will be an issue, it's a global point of discussion. So let the whole industry span out. I think everything will even out in due course of time.
Any direct exports to the United States?
Yes, no, not really United States, but we are sending material to Mexico for one of our large customers, namely GetRag.
But that gets impacted as well, right? Because of the restrictions imposed?
Yeah, but see, that's that's a ramp down program that we have on Mexico. But we've got other ramp up programs which are in Europe, so that doesn't impact us much.
All right. So, that was about the entire issue and the entire fiasco that's playing out in terms of trade wars. Wanted to get your sense, sir. I mean, for the 9 months of this year, you've done around a 13% growth, but plenty of positive commentary coming in from you in the past couple of calls. What kind of a revenue growth are you looking at for FY19? If you could give us a sense of that. And also your margins have been at around 14% odd. Can you hold on to those numbers, sir?
Well, holding on to the margins is always a tough job, but we will definitely work on sustaining those margins. You can imagine that competition sits on a doorstep ahead of you. So the pressures will keep on building. The BS6 norms coming in play will also have pressures on not only the pricing but also on the margins. But the strategies that we have placed in are working out well, and I see no reason why we should not be able to hold on to the margins.
And double-digit growth, top line?
Double-digit growth will also depend on the industry. See, the industry does well, that actually reflects on our performance also. For example, this year the industry has done 12.45% on two-wheelers. And the important point is that where our presence is more, that is the motorcycle market, that is the gap between the motorcycle and scooter growth differential has actually reduced down. So the motorcycle market has been growing up 11.35% and scooter at 17.82.
Okay.
So since our presentation, most of our revenues come from motorcycles, which is close to 68.5%, we tend to benefit on those changes.
So in that case, what kind of revenue growth can we estimate for the whole of FY18? You speak about supplying to motorcycle companies. We got numbers coming in from Bajaj, Royal Enfield and Hero MotoCorp as well. They didn't impress the streets. So do you think that could impact your numbers positively? Can we expect, say, 15-16% plus revenue growth on an FY18 basis? And what are you factoring in for FY19?
We are already at 15.2% on FY18 basis. If the industry continues the way things are moving, the way the industry in the market is moving, we are pretty positive of maintaining the same numbers. And let's hope for a good year next year also.
Okay. All right. Thanks so much, sir, for joining in and in fact giving us all those details. Well, keep an eye on the markets. We are slipping for sure. ICICI Bank, that's taken a leg down. HUL as well has taken a bit of a knock. And ONGC as well is slipping. So really, we are seeing selling actually across the board as we speak. We'll slip into a short break. You come back, we'll continue to focus on the markets. We'll also focus on a couple of stocks.
A lot of the stocks taking a knock on the mid-cap space. In fact, India Cement should come up for you. That one's at the low point of the day. A couple of these metal stocks also, NMDC at the low point of the day. Along with that, we have Motherson Sumi, exposure to the European markets, and that one too is at the low point of the day. But we got some data come by, the Nikkei manufacturing and the composite PMI, and that's seen a sharp fall in February. It's come in at 47.8 versus 51.7 month on month. To discuss this further, we have Aditi Nair, the principal economist at ICRA, joining us on the phone line. Also, Lata joining us to take us through this. Aditi, good morning. If you could tell us what implications would this have on your GDP estimates, the PMI data?
Yeah, good morning. See, when we look at the trend that's actually been there as far as the PMI for services is concerned over the last 6 months, we're actually seeing a trend repeating itself where we have 2 months of modest expansion followed by 1 month of contraction. So a very similar pattern played out in September, October, November is what we're seeing in December, January, February. So as of now, I am not going to mark down the service sector GDP forecast or GBA forecast for Q4. We will obviously watch for the March number as well before we take a call. But other than that, as of now, we're expecting a modest improvement in service sector growth in Q4, partly helped by a very slight but favorable base effect.
Okay. Well, Aditi, good morning. The problem is that it is showing lower activity. I mean, what is big services in India? I would assume construction. And that was the one which in the last GDP number showed a very strong, 6.8% rebound. Cement has done very well. So it didn't look, I mean, one wasn't prepared for this kind of a services number. But the Reserve Bank, I think Viralacharya even referred to the services PMI in one of the MPC statements. So, how seriously should we take this? Assuming it comes one more month of lower tick, would you start having doubts about the quality of growth at all?
Thanks, Lata. See, if it comes down below 50 next month as well, I'll certainly start to have concerns, unless we go back into the same pattern which we've had for the last 6 months.
Okay.
Now, specifically as far as construction is concerned, my view is that we've seen a lot of inputs of the construction sector showing very strong growth, partly because of a base effect and partly because the production activity was extremely dull in the first 6 months. So steel, cement particularly were following this pattern. And to the extent that we're going to use the input method of calculating the construction GVA, at least as far as the initial data is concerned, I think that is something that is going to, that's really what has happened in Q3 and would possibly continue in Q4 also. And of course, the base effect for construction is actually extremely favorable because our calculation is that construction GVA was a contraction of 4% in Q4 of last year.
Okay.
So from that point of view, I think things should be okay as far as the GVA numbers are concerned.
Okay.
But sentiment needs to improve substantially from the level that it is.
All right. We'll leave it at that. Aditi Nair, thank you very much for putting it into perspective. Well, just 2-3 things. One, this is the sharpest fall since August, so you want to worry a bit. Amount of new business orders placed with Indian services firms reduced in February, but it expanded in the previous 2 months. So this could be sheer lumpiness. You just want to worry a bit, but as Aditi said, 1 more month you should start worrying. The services PMI has been a bit volatile. It goes up 2 months, it contracts 1 month. So if it is a further month of contraction, then you worry. At the moment, you're just alert, not yet worried.
All right, we'll be alert then, Lata. Thanks so much for that. But for the markets, I think we should just pull up a few stocks that are taking a bit of a whack in the last few minutes. That's taken the Nifty to the low point of the day. HUL, that's an FMCG company. Just take a look at that. That's moved to the low point of the day. ONGC as well is taking a bit of a knock. You expect the likes of Vedanta to get hit, but some of these other stocks as well are taking a bit of a knock. Well, the pharma index is recovering from the low point of the day. A few of those stocks that are recovering, our ticker team as well is alerting you. I think you should just pull up the pharma index. You'll see that there is a bit of a recovery. It was down more than 2% in early trade. So a bit of a recovery you're seeing there. Cipla's moved into the green as well. So maybe you can pull up that stock as well. But let's move on to a CNBC TV18 exclusive now. Yash Jain caught up with Tom Linebarger, the global CEO of Cummins, from the sidelines of the launch of their technical center in Pune, and began by asking him on the product segments the company is looking to enter with respect to electric mobility. Let's listen in.
As I look forward, many competing technologies are now showing where we might see that they start to be more competitive than internal combustion engines in the future.
Okay.
Electric mobility is a good example. So, and we see the first applications likely to be in smaller vehicles, small passenger cars,
right,
or buses, things that are inner city, short range, where pollution is very critical and the charging infrastructure is there. So we are launching a brand new electrified powertrain all the way, battery all the way through all the motors and systems for buses in Q4 2019. So not too far from now, a year and a half from now, we will be in production making electrified powertrain for buses.
All right, before we wrap on Chartbusters, just keep an eye on 2 stocks, Thomas Cook as well as Quest Corp. Thomas Cook is up 8% with huge volumes and Quest Corp is down 7% with similar kind of volumes. Remember, Thomas Cook holds about 49% stake in Quest Corp worth 7,000 crores. Thomas Cook's own market cap is about 9,700. In fact, the intraday of Quest Corp should come up for you as well. So divergent moves there. Interesting. We'll keep an eye out on that. With that, it's a wrap on Chartbusters. Stay tuned to CNBC TV18. Trading Hour comes up next.